So today we will continue from where we stopped the last time. We are on personal income tax computation for employees and sole traders. How do we compute their personal income tax? So last week we started solving question. We explained what is personal income tax last week. What are the incomes subjected to tax under the personal income tax? What are the income exempted from tax? And so on like that. So we explained that last week. So we solved question 1 last week. Can we look at question 2 and solve? Let's solve question 2. So you can read question 2 for us. So please help us read examinable question 2. Question 2. Molam Sule Yusuf is an employee of Temidire Limited. His salary is 5 million naira per annum. He is married with 5 children. The first 2 are from his first wife, and the remaining from the second wife. The 2 wives live with him. The eldest children is now a university graduate and teaches in a secondary school in Kaduna, while the remaining children are university students. Malam Sule Yusuf has a life assurance policy with Jabu Insurance Limited. The sum assured is 250,000 and he pay a premium of 2,005 per month. He also contributes 1,000 monthly to a pension scheme approved by Joint Task Boards. The following information is also made available. The company pays 180,000 per annum for his accommodations and provide him with an official car which has a market value of 2 million naira. He spent 6,000 on his aged father and 7,000 on his aged mother. Both has no sources of income due to old age. He will be retiring on December 31st, 2021, and will be paid a gratuity of 300,000. We also paid a lump sum of 100,000 for loss of office. Required computes his tax liability for the relevant year of assessment. So this is a question relating to Malam Sule Yusuf. We are giving the annual salaries. We are giving some of the tax exemption in this question. So we start by looking at which year will be the year of assessment. Which year will be the year of assessment? Which year will be the year of assessment? All the information provided relating to employment income, they are for 2021 year of assessment. All the information provided relating to employment income are for 2021 year of assessment. So that means it's going to be assessed to tax based on 2021 year of assessment. It's going to be assessed to tax based on 2021 year of assessment. So in the income provided to Malam Sule Yusuf, the only employment income he earned is salary of 5 million per annum. Salary of 5 million per annum. So Malam Sule Yusuf, computation of tax liability for 2021 year of assessment. Earned income. Under the earned income, what do we have? Under the earned income, we have salaries. Salaries. 5 million naira. Apart from salaries, what other employment income do you think Malam Sule Yusuf earned? Apart from salary, what other employment income do you think Malam Sule Yusuf earned? If you look at note A, note
It
A,
got a benefit in kind.
he has a benefit in kind. The company
Two benefits.
pay 180,000 per annum on his accommodation. That money that company pay for his accommodation is a benefit in kind. Benefit in kind accommodation. That means the rent the company pay is 180,000. So that is one of his income. Aside that, what other benefit in kind does he have again?
He has an official car.
So how much is the cost of the official car?
Is 2 million. The market value
Is 2 million. So how much are we going to recognize?
5% of 2 million.
5% of 2 million. That is benefit in kind for official car. So looking at the computation of Malam Sule Yusuf, under the earned income, the only earned income we have is employment income. First, salary, 5 million naira. Second is benefit in kind. What are the benefits in kind we have? Benefit in kind accommodation. The rent the company pay for the accommodation is 180 million. Benefit in kind official car. 5% of 2 million. That is 100,000. That is official car. 5% of 2 million. That is 100,000. You understand? Apart from that, if you look at note C, he will be retiring on 31st December 2021, and he's going to be paid what? gratuity. Gratuity of how much? Gratuity
300,000.
of 300,000. So that gratuity too is part of income. Is part of income. The gratuity too is part of what?
Income.
So we had the gratuity as part of income, 300,000. So Mr. Malam Sule Yusuf does not have any unearned income. He doesn't have any unearned income. So all the income he had is earned income, which is employment income. At the end of the day, when you add the salary, the benefit in kind, salary 5 million, benefit in kind, accommodation 180,000, benefit in kind official car 100 million, gratuity 300,000, benefit in kind official car, 100,000, gratuity 300,000. When you add everything together, the total income for Malam Sule Yusuf is 5,580,000. The total income for Malam Sule Yusuf is 5,500 and what? 80,000. So after you get the total income, what do you minus from the total income based on the format I gave you?
Tax exempt.
Tax exempt. So in this question, do we have any tax exempt? Who can give me 5 examples of tax exempt?
Okay. Pension scheme.
Pension contribution.
Scheme.
Yes.
Health insurance scheme.
National Health Insurance Scheme. NHIS. Yes.
Housing fund scheme.
National Housing Fund. NHF.
Then gratuity.
Yes, gratuity. Which other one again? There are 2 more. Who can mention the remaining 2? Life assurance policy, the premium you pay. Interest on mortgage loan too. They are all tax exempt. So in this question, you will search which of the tax exempt do we have? Which of the tax exempt do we have? So please, let's search. Which of the tax exempt do we have?
Okay. Sule Yusuf had a life assurance policy with Jabo Insurance Limited. The sum assured is 200,000, and he pays a premium of 2,500 naira per month. So the premium is 2,500 naira.
So that life assurance, the premium is what we are going to recognize. 2,500 naira. And what are we going to do to this 2,500 naira per month? We are going to times it by what?
To times it times 12 months.
By 12 months. So we times it by 12. So 2,005 times 12 is going to give us what? That is
30,000.
30,000 naira. 30,000. Can we get that?
Yes, 30,000.
Apart from that, which other life insurance tax exempt does he have again?
He has a pension scheme
of 1,000 naira per month. 1,000
Yes.
times 12.
12,000.
So that means his pension contribution will be 12,000. His pension contribution will be 12,000. So aside that, that gratuity that we recognize as income, the gratuity we recognize as income, we also recognize it as what?
tax exempt.
Tax exempt. So if you look at our solution now, after the total income of 5,580,000, we have less tax exempt. We have what? Less what? Tax exempt. One of the tax exempt we have life assurance what? Policy, 30,000. That is the premium. That life assurance premium, 30,000. Pension contribution, 12,000. That gratuity that we recognize as income too, we put it as tax exempt, 300,000. At the end of the day, when you add all the tax exempt together, it will give you 342,000. So this 342,000, you will minus it from what?
From the
From the total income.
From the total income.
So 5,580,000 minus 342,000 from it. What are you going to get? You will get a gross income of 5,238,000. That is the gross income you will get. 5,238,000. That is the gross income you will get. So when you get that, you will now less your what? Tax what?
Relief.
Relief. You will less tax relief. For your tax relief, what are you going to less in your tax relief? What you are going to less in your tax relief is going to be a consolidated relief allowance, which is higher of either 200,000 or 1% of GI. In this question, how much is 1% of GI? 1% of gross income. How much is 1% of gross income? That means 1% of 5,238,000 is what?
52,380.
You can see that it's less than 200,000, Abby.
Yes.
Yes, sir.
So which one are we going to take? Is it 200,000 or that 52? We are going to
200,000.
take 200,000. Since 1% is less, we are taking the higher one, Abby.
Yes,
Plus
sir.
20% of GI. Plus 20% of what? GI. So what is 20% of GI? 20% of 5,238,000.
1,047,600.
So 1,047,600. You now plus the two together. You plus the 200 to it. That means 1,247,600. 1,247,600. So that is that. You minus that consolidated relief allowance. You minus it from where?
Gross income.
You will minus it from the gross income. You will minus it from the gross income. So when you minus it from the gross income, you are going to get a chargeable income of how much? 3,990,400. That is the chargeable income you are going to get. So this chargeable income that you get, what do you do to it? This chargeable income that you get, you now compute the tax liability. How do we compute the tax liability? First 300,000 is going to be taxed at what percentage? At 7%. First 300,000 will be taxed at 7%. That will give us 21,000. Second 300,000 is going to be taxed at what percentage? 11%. That will give us 33,000. Next 300,000. Next 500,000 going to be taxed at 15%. That will give us 75,000. Mind you, before you go for that, you need to consider what you have at your taxable income. Do you understand? If I remove 300,000 from this taxable income, they are still going to be remaining. If I remove another 300,000, we are still going to have income remaining. If I remove 500,000, we are still going to have income remaining. I will also go to further. Next 500,000 at 19%. That one will be charged at what rate? 19%. It will give us 95,000. When you add everything, 300 plus 300 plus 500 plus 500, that is how much?
1.6.
That means we still have a remainder income.
Yes.
If we minus 1.6 from the 3,990,400, the income still remain. That means I can still go further to next 1.6 at what percentage?
At 21%.
At 21%. That one will give us 336,000. 336,000. When you add from 300,000 to 1.6, when you add everything together, how much is it giving us?
3.2.
From this 300,000 to 1.6, 3.2. What you need to do, that 3.2, you minus it from where?
From
3,990.
3,990,400. What will be the remainder income?
790,400.
For 790,400. That one will be taxed at what percentage?
24%.
24%. So it's going to give us 189,696. At the end of the day, when you add all the income together, when you add them together, all the income, you add them together, all the tax liability, when you add them together, starting from 21,000, 33,000, 75, 95, 336,000, and 189,000. That means the total tax this Molam Sule we paid is 700 and what? 749,696. 749,696. That is the total tax Molam Sule Yusuf we paid. So do we have any issue on this? Do you have a question regarding this question? This question we just solved. Do you have a question?
Yes, sir. I have a
to
question.
ask?
Good morning.
Okay. Good morning.
Please, sir, I would like for you to explain how you got 100,000 in the benefit in kind official car. I'm a bit lost there.
Okay. Okay, I want to ask first, what is the treatment of benefit in kind? How many type of benefit in kind do we have? And how do we treat them? So who can tell me the type of benefit in kind we have and how we treat them? Oh yeah, now, based on my last week explanation, the benefit in kind, we can classify it into three, how many types? Benefit in kind can be classified into three types. You know that? It can be classified into three types. Number one is what? accommodation. Are you with me?
Yes,
Yes.
sir.
Number one is accommodation. Number two is provision of other assets. While number three is provision of what? Support staff or domestic staff. Provision of support staff or domestic what? Staff. When we look at accommodation, how do we treat benefit in kind? How do we recognize benefit in kind when an employer provides accommodation to an employee? If the accommodation is rented, the annual rent paid by the employer will be the amount that will be recognized as accommodation. But if the accommodation is not rented, if the accommodation is owned by the company, the rateable value, the annual rateable value paid by the annual rateable value on that building will be recognized as benefit in kind if the accommodation is owned by the company. The second type of benefit in kind, provision of other assets. What are the other assets? Car, plant and machinery, furniture and fitting, motor vehicle, etc. If an employer provides an employee any of these other assets, the most common other asset we have is official car. When you are giving a car, what you are going to recognize as benefit in kind will be 5% of the cost of the car. So go back to this question. How much is the cost of the car provided by the employer to Malam Sule Yusuf?
2 million, sir.
So 5% of 2 million.
100,000. Thank you, sir.
Okay, so do you understand that?
Yes, sir. Thank
So
you, sir.
that is how we get 100,000. So any other questions?
So I have a question.
Okay.
Okay, it's under the consolidated. Can you scroll up a bit? You know, when we did 1% of the total, when we did 1% of the gross income, it gave us 57,000 and some figures. I don't know. You said
52,000.
yes, 52,000. You said it's lesser than this 200, so we are taking 200. What's if in a situation where it's higher than this 200?
We said, look at the consolidated relief allowance. We say higher of either 200,000 or 1% of what? GI.
Gross income.
Anyone that is higher is what we take.
Okay.
Last week, the question we saw last week, 1% of GI is higher than 200,000. That is the reason why we take 1% of GI last week.
Okay.
For you to know whether 1% of GI is higher or is 200,000 that will be higher when you are solving a question. If your gross income is less than 20 million,
Okay.
that means 1% of that gross income will be less than 200,000. You will take 200,000. But anytime your gross income is higher than 20 million, that means 1% of that gross income
Will be taken.
will be taken. Is going to be higher than 200,000. Because let's
Okay.
say, for example, 1% of 21 million, how much is it giving us?
2.1.
1% of 21 million.
210.
210.
Yeah.
You can see that when I compare it with 200,000, which one am I going to take?
210.
210. So that is it. Any other question?
No, sir.
Okay. Go ahead with your question.
So please, can you go to that tax liability figure? The last part, I don't understand that part.
The last part. Okay.
Above 3.2 at 24%.
Yes. Above 3.2, we are referring to it. When you add 300 plus another 300, that is 600. You add 500 to it, that is 1.1. You add 500 to it, that is 1.6. You add 1.6 to it, that is 3.2. When any of your income, your chargeable income, that is more than 3.2, that chargeable income is going to be taxed at what percentage? 24%. Look at what you are having as your chargeable income. 3,990,400. When you minus 3.2 from it, what is going to remain? What is the remaining? Is going to remain. We are going to have a remainder income of 790,400. That one is going to be charged at what percentage? 24%.
24%.
That means, yes, it's the one that is above 3.2. That is the one that is above 3.2. That is the reason why I bracket it.
Okay, sir, but what if, let's say that it is lesser?
Sir?
What if it is lesser than that?
If it is lesser than what?
3.2.
If it is lesser than 3.2, you will not get to this place. Take for instance, if your chargeable income is 3 million, how do you compute your tax liability? If your chargeable income is 3 million, oh yeah, compute your tax liability. Assuming your chargeable income is 3 million. So how do you compute your tax liability? You can compute the tax liability when your chargeable income is 3 million.
Can I try, sir?
Yes.
And if your chargeable income is 3 million, you take the first 7%. That is at 300,000.
Yes.
Yes. And you take the other the second 300,000 at 11%.
Okay.
Then you take the next 500,000 at 15%. And then you take the next 500,000 at 19%, which will give us 1.6 already. And then you take with 1.6 already.
That
then you take the next
1.6, what you need to do, you need to minus it from what?
From the chargeable income of 3 million.
3 million. So what is it going to remain?
1.4.
What will be the remaining?
1.4, sir.
1.4.
That 1.4 is going to be charged at what percentage?
21%.
At 21%.
21%. 21%. Because that 1.4 fall within 1.6. Do you understand? So in that case, you will not get to 24%. So by the time we solve more questions, you will understand this. By solving more questions, you are going to understand. So let's go to another question.
So can I ask something?
Okay.
If, for instance, let's say, as you calculated now, and the remaining is 1.7. So if we charge the 1.6 at the 19%, we'll now we'll have to charge the remaining 100,000
1.6 at 21%.
Okay, just the
1.6 at
remaining
21%.
100,000 at 24%.
Yes, you are right. Even if it is 20,000 that is remaining, after you remove the 1.6, is going to be charged at 24%.
Okay, thank you.
Okay. So let's look at question 3. Somebody should help us read question 3. Oh yeah, please help us read the question 3.
Alhaji Tijani Bello is married and has 6 children, aged between 4 and 21 years. All except Philip, aged 21, are still in school. The following details were obtained from his employment records. 1. He retired from his previous employment with Standard Chartered Company Limited on September 30th, 2015. He was on an annual salary of 6,630,000. 2. On October 1st, 2015, he took up a new employment with Rehoco International Consulting on a salary of 9.6 million per annum, transport allowance of 480,000 per annum, and rent allowance of 660,000 per annum. 3. From October 1st, 2015, he will be on a pension income of 960,000 per annum from his pension fund administrators. 4. Contributions to National Housing Fund and National Pension Scheme are 195,000 and 615,000 respectively. 5. Alhaji Tijani Bello has a life assurance policy on his life with a sum assured of 7.5 million and annual premium of 660,000. 6. He lives with his wife and 2 aged parents on whom he spends a total sum of 1.5 million per annum. 7. Alhaji Tijani Bello received dividend from his publicly quoted investment on Nigerian Stock Exchange as follows. 2013, 800,000, 2014, 600,000, 2014, 720,000, and 2015, 950,000. Required, compute the personal income tax payable by Alhaji Tijani Bello for the relevant year of assessment.
Okay, thank you. Now, for us to determine the relevant year of assessment, which year does he receive employment income? Which year does he receive employment income? The employment income is for 2015. That means our year of assessment will be 2015. Since it is 2015 that he received employment income. Now, this Alhaji Tijani Bello, he worked in 2 companies. Before, he was working in Standard Chartered Bank, Abi. While he was working in Standard Chartered Bank, his annual salary is 6,630,000. You understand? And he retired in Standard Chartered Bank in which month? September 30th, 2015.
30th.
That means how many months in the year 2015 does he work in Standard Chartered
9
Bank?
months.
9 months.
9 months. So that means this 6,630,000 is going to be what?
Treated as
Prorated.
9
This is
divided by
prorated.
12 times
It's
the
going to
amount.
be prorated.
Yeah.
So when you look at the solution, Alhaji Tijani Bello, earned income. The earned income, we start from the old employment, which is the Standard Chartered Bank. His annual salary there is 6,630,000. 6,630,000 times 9 over 12. 6,630,000 times 9 over what?
Sorry.
Over 12 is going to give us 4,972,500. 4,972,500. Now, note 2 said on October 31st, he took a new employment with Rehoco International Limited on annual salary of how much?
9.6 million.
Transport allowance 480,000. Rent allowance 660,000. So this annual salary of 9.6, how many months does he work in this new employment?
3
3
months.
months.
So this 9.6 million, we are going to times it by 3 over what?
12.
12.
By 12. Transport allowance too, we are going to times it by 3 over 12. Rent allowance too, we are going to times it by 3 over 12. So at the end of the day, let's go and check. Under the new employment, the basic salary, that basic salary that he earned under the new employment, which is 9.6 times 3 over 12, it will give us 2.4. The transport allowance that he earned, 480,000 times 3 over 12, it will give us 120. The rent allowance, which is housing allowance that he earned, how much is that? 660,000 times 3 over 12. It will give us 165. No, 3. They said from October 2015, from October 2015, it will be on a pension income of how much?
960,000
per annum from his pension fund administrator. This one is not pension contribution, my people. This is pension what?
pension income.
Income. This pension income is paid to him because he has worked in Standard Chartered Bank.
Yes, worked for it
While
previously.
leaving Chartered Bank, his pension in Standard Chartered Bank was now paid to him as an income. This will be subjected to tax. It's not pension contribution, no. It's an income. Pension income will be subjected to tax. So 960. This pension income is from the old employment, but is paid from 1st of October. So how many months are we going to recognize for the pension income? Three months. October, November, and December. So this pension income, 960 times 3 over 12. What is it going to give us? It's going to give us
40,000.
240,000.
Sir, please, can you just explain that pension income again?
This pension income is as a result of that he has worked in a company before moving to a new company. When he's now moved to a new company, his pension from his old company, do you understand, was now paid to him as an income. All the pension he has contributed so far while he was working in the former company was now PFA now started paying it to him as an income. They assume he has reached retirement age and is no more working again, whereas he's still working in a new company. Whereas he got a new job in a new company. So all this our pension contribution that we are doing every month, that they are deducting from our salary, by the time we attain 50 years and we stop working, they will be paying it to us as an income. Do you know all this pension contribution that they are deducting from our salary is our income, it's part of our income. In the long run, when we reach the old age, they are going to pay it back to us. You know, we are saving for future, for old age. That is the reason why we are making the pension contribution. So this question assumes that when Mr. Tijani leaves Standard Chartered Bank, that maybe Mr. Tijani have reached the age of 50 years old and they start paying back the pension income to him. Do you understand? When you reach the age of 50 years and you don't have any other job at that age, you can apply for payment of your pension income, that your pension contribution. You can apply that they should be paying it back to you. Do you understand? Provided that you don't have any other job doing, they will now be paying it back to you every month. Do you understand? They will not pay it in a lump sum. They will be paying it back. They will. It's going to be divided into a month. So it's based on life expectancy. So this pension income is an income. So what we are going to recognize is for 3 months, October, November, and December. So aside that, note 4, it contributes to National Housing Fund, National Pension Scheme, 195,000, 615,000. This is tax exempt. Note 5, he paid life assurance policy, which the premium is 660,000. This is also tax exempt. Note 6, he lived with his wife and his aged parents, he spent this on that. This note 6 is irrelevant to our question. There's nothing concerning on whether he has 20 children, whether he lives with his wife, whether he spent 20 million on them. It's irrelevant. Do you understand? It is irrelevant. So that 1.5, there's nothing we want to do. Note 7. Alhaji Tijani Bello received dividend from his publicly quoted investment on Nigeria Stock Exchange. How much dividend does he receive? For 2013, 800,000. For 2014, 600,000. For 2014 again, 720,000. Why for 2015, 950,000? Dividend is treated as which type of income under the format I gave to you?
Frank investment income.
Dividend is part of which income falls before you treat it as frank investment income?
Unearned income.
Income.
Earned income. So going to the solution now. After you have recognized all the earned income, you now have unearned income. This tax liability, which year are we doing the tax liability? Which year, for which year of assessment?
2015.
Based on preceding year.
So which
basis,
dividend are we going to take?
The dividend on 2014, 2014.
Because unearned income is assessed to tax on what basis?
Based on preceding year basis.
Preceding year basis. Unearned income is assessed to tax on preceding what? On preceding year basis. Unearned income, since we are in 2015, which unearned income are we going to take?
2014.
2014.
Which is 600,000 plus what?
720,000.
720,000. That will give us how much?
One million
1.320.
320,000.
So it will give us 1,320,000. So my total income, how much will be my total income? Earned income plus unearned income. My total income will be 9,217,500. From your total income, since you have dividend as an unearned income, what are you going to do to dividend again?
You
You are going
left
to
it as
remove
frank investment income
As a frank
from the total
investment
income.
income from the total income. You will remove the dividend. That dividend that you recognize as unearned income, you will also come and remove it again as a frank investment income from the total income. At the end, we are going to get net total income. How much is our net total income? 7,897,500. From our net total income, we can less tax exempt. In this question, how many tax exempt do we have?
Three.
How many tax exempt do we have?
Three.
Name them.
Contribution to
NHF,
national
pension, and
NHF
life assurance.
195, pension contribution 615, and life assurance premium 660. NHF 195, pension 615, life assurance 660. At the end of the day, when you add everything together, what do we have? We have 1,470,000. You minus it from the net total income. That will, you are going to get a gross income of how much? 6,427,500. This 6,427,500, you now minus consolidated relief allowance, which is tax relief, higher of 200,000 or 1% of gross income. In this case, 200,000 is higher. I will take 200,000. 1% of gross income, 20% of gross income too. I will plus it with 20% of gross income. 20% of gross income is giving me 1,285,500. If we add the two together, it will be 1,485,500. 1,485,500. When you minus it from the gross income, what are you going to get? When you minus it from the gross income, what are you going to get? You are going to get the taxable
4,942,000.
income of 4,942,000 naira. 4,942,000 naira. So you can compute your tax liability. You can compute your tax liability. First 300,000 is going to be charged at what percentage?
7%.
7%, which gives us 21,000. Second 300,000 is going to be charged at what percentage?
11%.
11%.
will give us 33,000. Next 500,000 at 15%. It gives us 75,000.
75,000.
Next 500,000 at 19%. It gives us what?
95,000.
5,000.
95,000. Next 1.6 at 19%, at 21%. It gives us
336,000.
So what will be the remainder income? If we add all of them, all this income, 300, 300, 500, 500, 1.6, if you add them, it's 3.2. That 3.2, we minus it from what?
4.9.
We minus it from 4,942,000. When you minus it, what do you have?
To give us
1.74.
1,742,000.
So that one will be tagged at what percentage?
24%, which will give
4%.
us 418,000.
At the end of the day, your total tax liability is 97,978,880 naira. 978,080. That is your total tax liability.
Okay.
So that is that on this question. Now, question 4. Mr. James Akpobo. Let's try question 4. Mr. James Akpobo. So somebody should help us
Sorry
with-
to cut you short, please. I don't know if you've explained this before, but since those contributions like the NHF and all are not included in the total gross income, why are they deducted?
They are not included.
So I
According
believe
to
the
the law,
total gross. Okay.
according to the law, when you have a gross income of 2 million as your salary, or in a year, if your gross salary, I don't understand your question. Please ask again. Don't let me confuse. Yeah, ask your question again.
No worries, I think I get it now. Sorry to take you.
You
I
get
think
it
I
now?
get it now. Yes, I was thinking of it as net, but it's actually gross. So gross it has not been charged yet.
Okay. So question 4. Let's read the question 4.
Sorry, sir. Sir, is
Yes.
it possible for those on earned income to be given as net amount, as a net
Yes.
amount?
It's possible. We are going to solve a question
So,
like that.
okay, sir.
If it's given net, you will convert it to gross.
Okay.
On earned income, attract withholding tax.
Yeah.
If it is gross, that means withholding tax is yet to be deducted. If it is net, that means withholding tax has been deducted. So when in the question you are given a net, in your solution, you must convert it to gross. Do you understand?
Yes, sir. So, sir,
So
when
we
we
are
convert to gross, are we going to still withdraw deduct with withholding tax after solving the tax liability?
yes, we are still going to deduct withholding tax. So
Okay.
for you to understand this question you had very well, don't let us solve this question 4. We are still going to solve this question 4. Let's go to the question that has what that relate to the question you just asked now, which is my question 5. Question 5. This question 5, I like this question 5. Oh yeah, let's read the question 5. If you can solve the question 5, there is no personal income tax you cannot solve. This question 5 we want to solve. Please, let's pay more attention to this question 5. Somebody should help us read.
Mrs. Nike Isaka is an employee of Shell Petroleum Limited. She gave you the following information and asked you for your advice in respect of her potential tax liability for 2023 year of assessment. Then you have salary for 2021, 20 million, 2022,
Just leave the
24.
figure. Just
Okay.
leave the figure.
Okay. Then B, Nike resides in Lekki Phase 1, Lagos State, and derives the following benefit from her employment. A company car which cost 300,000 naira at acquisition was provided for her use with effect from January 1, 2023. The market value of the car in 2023 was 55,500,000. A company house with rateable value of 2.5 million for 2023 was provided effect from 1st April 2023. Prior to this date, Nike was in receipt of housing allowance. An amount of 4.8 million shown above was for 9 months to 31st March 2023. The employee does not reimburse any rent to the employer. C. Nike runs a part-time business under the name A&A Enterprises. Recent profits. Please scroll up. Okay, recent profits of the business as adjusted for the purpose of taxation are as follows. Year ended 30th September 2023, 4.4 million. Year ended 30th September 2022, 6.6 million. Year ended 30th September 2021, 5 million. D. Capital allowance claimable is as follows. Tax years, amounts. Please scroll up. Okay, 2021, amount 415,500. 2022, 510,125. 2023, 712,000. 2024, 811,450. E. Nike donated 750,000 naira to Nigerian Institute of Trypanosomiasis on 1st January 2023. F. She holds 35% of the equity in R&D Company Limited, which was incorporated on 1st January 2023. The company was set up for the purpose of research and development, and cost to Nike is 600,000 naira. Contribution to NHF and National Pension Scheme are made respectively. She insured her life and that of her spouse, Mr. Tunde, and this she paid 2.8 million and 1.7 million respectively as annual premium. I. Investment income were as follows. Dividend gross, dividend rent, and fixed deposit interest. You are required to compute the tax liability and monthly tax due.
Thank you very much. So the tax liability we are asked to compute is for which year of assessment first?
2023.
2023. It has been stated year 2023. Even if there's not stated, you ask yourself, out of the year given to us, which one is the latest year? The latest year is what? 2023, Abby?
Yes.
So Mrs.
Yes.
Nike Isiaka, we are asked to compute the tax liability for 2023 year of what? Assessment. This table given to us is which type of income? This table given to us is which type of income?
N income.
N income.
N income. Under the N income, employment income, Abby? You know,
Yes,
I
sir.
said N
Yes.
income is divided into two, employment income and trading income, Abby?
Mm.
Abby?
Yes,
Earned
sir.
Yes,
income.
sir.
Yes, sir.
Employment income is assessed to tax on what basis?
Actual
Actual
year
year
basis.
basis.
Actual year basis.
What about trading income?
Preceding year
Preceding year
basis.
basis.
Preceding year basis. So please know that. Now, this earned income is assessed to tax on actual year basis. So which earned income are we going to take?
2023.
2023. Actual year basis means when something is actual, when is it going to start? Actual
It's
year
going
basis.
to start here.
Same
It's
year.
going to start January, Abi.
Yes.
Yes. January
Actual year
to
basis
December.
means a year that starts from January, 1st of January, and it's going to end when?
31st
31st
of
December.
December.
So looking
Yeah.
at this question, my people, this income given to us 2021, 2022, 2023, at the end, at the top of the income, they say for year ended. That means this income for the year ended 30th June 2021, Abi.
Yes.
For year ended 30th June 2022, Abi.
Yes.
Yes.
For year ended 30th June 2020 what?
3.
2020.
3. Now, me, I want to compute my Mrs. Nike employment income, and I want to use actual year basis. I need is employment income of January to December 2023, Abi.
Mm-hmm.
Yes.
So what I will do, my people, this one, this 2023 year ended 30th June, the one that belongs to 2023 among that is January to what?
December.
June.
June,
January.
which is 6 months, is for 1 year. But the one that belongs to 2023 is for January to June. That means this 32,000, I'm going to prorate it. I will take the one of 2023 among it. 6/12 times 32,000. That means I've taken the one of January to June. The balance, July to December. Where is July to December?
July to December is in the 6 months. 30,
Which is
31st.
this 19,000, Abi?
Yes.
Because, ladies and gentlemen, if, take for instance, something year ended 30th June 2023, when does that year begin?
January.
No. A year that ends 30th
July.
June
July
2023.
2022.
July 2022.
July 2022. So I need only income of 2023. I need actual year basis. In my actual year basis, January to June is included here. Why July to December is given to us when they write 6 months to 31st of December 2023. So why solving this question for the employment income, starting from basic salary? What am I going to do for me to get the one of 2023 on actual year basis? I will said 32,000 times 6/12, Abi,
Yes.
plus what?
19,000 times 6/12.
No, we are not going to use 6/12 for 19. Because look at it, how they write the 19. They say 6 months to, that means this 19 is not for 1 year, it's for how many months?
6 months.
6 months.
It's for 6 months, my people. 6 months to 31st December 2023. So
Yes, July.
look, yes, from July to December 2023. So looking at the solution now, my basic salary, 32 times 6 over 12 plus 19, it will give me 35,000. That means I've assessed this basic salary on actual year basis. I've taken the basic salary from January to what?
To December.
2023, Abby?
3.
Yes. Don't go and take the only 32 million. If you take this 32 million only, you do not assess it on actual year basis. Because this 32 million, it has 6 months that relate to 2022, Abby. Do you understand?
Yes.
So entertainment too. Entertainment too. This entertainment, I will do the same thing. 6 over 12 times 3.8. That's 3,008 plus 2,000. So how much is it going to give us? 3,009. 3,000 what? 9. Utility allowance. Utility allowance. 1.6 times 6 over 12 plus 1,000. It will give me 1.8. Do you understand?
Yes.
Now, housing allowance. Housing allowance. Look at housing allowance. What did I do for housing allowance too?
This is what
4.8, Abby.
4.8. Yeah.
Times 6 over 12 plus 0, Abby. But I cannot do that for housing allowance. I will not do that for housing allowance. Ladies and gentlemen, why solving personal income question? We normally make some assumption. Why solving personal income question? If you collect housing allowance, you will not be entitled to benefit in kind accommodation. You cannot be enjoying housing allowance as well as be giving benefit in kind accommodation. It's either you take one, maybe you take accommodation or you take housing allowance. Transport allowance too. You cannot be enjoying transport allowance and take which type of benefit in kind that relate to transport allowance.
Official car. That's others.
Official car. It's either they give you official car or you collect transport allowance. So this housing allowance of 4.8, there's a note that relate to it, that guide us, which is this note. Somebody should help us read.
The company house.
Oh yeah, read it.
So I remove that on the face.
Oh yeah, please let me read that.
There's something covering it.
Oh yeah, read it, read it.
A company with rateable value of 2.5 million naira for 2023 was provided effect from 1 for 2023. Prior to this date, Nike was in receipt of housing allowance and amount of 4.8 million naira shown above was for 9 months to 31/3/2023. The employee does not reimburse any rent to the employer.
Nike started enjoying accommodation from which month? Accommodation.
April.
April. That means from April to December, he enjoy accommodation. Do you agree with me?
Yes.
Yes, sir.
Housing allowance will now be from where to from when to when?
January to March.
January to March.
January to March. So they are now telling us that, look, oh, this 4.8 shown above, this 4.8, ideally is supposed to end when?
December.
No, this 4.8 is supposed to end 30th when?
June.
30th
June
2023, Abby?
Yes.
Yes, sir.
But they said, starting from April, Nikes start enjoying accommodation, Abby?
Yes,
April.
yes.
May, he enjoy accommodation. June, he enjoy accommodation, Abby? They are now telling us that this 4.8, oh, it does not end in 30th June, oh. It's not up to 12 months, oh. Because if it ends in 30th June, it's going to be 12 months, Abby?
Yes, sir.
Rather, it's for 9 months. It's for what?
9 months.
9 months, which it ends when? 31st March 2023. Why is it end in 31st March instead of 30th June? Why?
Because they've given they provided a house by 1st of April.
So when we want to prorate this housing allowance, how many 2023 housing allowance, how many months do we have for 2023 in this housing allowance?
9 months.
4.8.
9 months.
That would be 9 months.
No,
3 months.
3 months.
January, February, March.
January, February, March. So it's going to be 3/9 times 4.8. 3/9 times what? 4.8. Because, ladies and gentlemen, this 4.8 of housing allowance, it starts when? When does the month start? It starts 1st of July 2022, Abby?
Yes.
Yes.
But it's supposed to end 30th June. But additional note said, no, it did not end 30th June like others. It ends for
March.
31st of March. That means the one that belongs to 2023 among these 4.8 is for January, February, and what? March. So that is for housing allowance. For our housing allowance, if you want to prorate it, don't go and use 6/12. Oh. Like that, you are going to use what?
3/9.
Times 4.8. Transport allowance too. What is the note do we have on transport allowance? Look at these notes. He started enjoying official car when?
July, 1st of July.
1st of July. So that means this transport allowance of 2,000, it ends 30th of June, no doubt. Abby?
Sir.
This transport allowance of 2,000, it ends 30th of June 2023 because it started enjoying an official car 1st of July 2023, Abby?
Yes.
So why doing our transport allowance? 6/12, we can say 6/12 times 2,000. Yes. Transport allowance. 6/12 times what?
2,000.
2,000. We will get the 1,000. Because he started enjoying official car starting from 1st of July. So that is it on this employment income. Under the employment income, we have treated basic salary, we have treated entertainment, we have treated utility, we have treated housing allowance, we have treated transport allowance. Let's go and treat.
I don't understand this housing allowance.
What you don't understand in the housing allowance?
That's why we are now doing this with 3/9. The 3/9 that we did. I don't understand it.
Okay. What do you think we should, how many months do you think we should use for the housing allowance? We're supposed to use 6/12, Abi?
Yes.
We can't use 6/12 because the note, there is a note. Assuming there is no note, this 4.8, we're supposed to use 6/12. But a note, look at the note. This is the note that scattered the housing allowance. This note really helped us a lot. Oh. This examiner, he helped us. Oh. He explained everything to us. Some examiner will not explain up to this side. And you should expect what you're supposed to do. Some examiner, they will say, this person started enjoying accommodation from 1st of April 2023. They will just stop there. That means you're supposed to know that when he start enjoying the accommodation, he will stop collecting housing allowance. You're supposed to know that this housing allowance, it's not up to 30th of June. But the examiner helped us. They said the housing allowance 4.8 shown above is for how many months?
For 9 months.
9 months.
Ending in when?
31st of March.
31st March.
9 months. When something is 9 months and it ends in 31st March 2023, how many months does it belong to 2023?
3 months.
3 months. January, February, and March. So that is the reason why we use 3 over what?
Over 9.
Over 9 times the 4.8. The examiner really tried for us. The examiner really tried for us. So some good examiner, like Mr. Idris, they will not even put all this. You understand? They will say, if they put all this statement, it will help the student now. And you understand? They will just stop from 1st of April. It's you that will cool your mind down. This person start enjoying accommodation from 1st of April. This housing allowance given to us cannot be up to 6 months. It cannot be up to 12 months. Since he started enjoying accommodation from 1st of April. But the examiner explained it in detail for us not to be confused. Do you understand? So,
yes,
after that, after we have treated transport allowance, housing allowance, let's go to benefit in kind. Number one benefit in kind that we have in this question is what? A company car, which costs how much?
30 million.
30 million.
30 million. At acquisition. But has a market value of how much?
55 million.
Ladies and gentlemen, when under benefit in kind, if you are giving official car asset, they give you the cost, they give you the market value. Please recognize the cost. Assuming the cost is not given, that is when you recognize the market value. So Which one are we going to recognize for this official car? Is it 30 million
30
or
million.
55 million?
30 million.
30 million. The question now is, when you are giving official car as part of benefit in kind, how much are we going to recognize as the benefit in kind?
5%.
5% of 30 million. And it started enjoying the official car from which month?
July 1st.
July 1st.
July to December is how many months?
7 months.
6 months. So, if you want to get the benefit in kind for official car, 30 million times 5% times 6 over what?
6 over 12.
12.
Over 12. Benefit in kind, official car, 30,000, because we are using 1,000 up, times 5 what? 5% times 6 over 12. It will give us 750. $750. The next benefit in kind we have is what? Accommodation. Accommodation. How much is the rateable value?
2.5 million.
2.5 million. That is what we are going to recognize for accommodation. The rateable value, 2.5 million. But the accommodation, how many months are we going to recognize for the accommodation? How many months?
9 months.
9 months.
9 months. 9 over 12 times 2.5. That is benefit in kind accommodation. 9 over 12 times 2.5. You can see that. 9 over 12 times 2.5.
So, sorry, sir.
Yes.
So where do you get the 5% that you use on that official car?
It is the standard under the benefit in kind. It is the standard. They will not give us the 5%. I gave you as a note. I explained to you as a note that provision of other assets, we attract 5%. It's under the note, under benefit in kind. They will not give us in the question. We should know by ourselves. Do you understand?
Okay, sir.
So, our accommodation, 1,875,000. That is benefit in kind accommodation. You know, why solving this question of Mrs. Nickel? Earn income. We have employment income. We have treated all the employment income. Apart from my employment income, what other earned income do we have again? Earned income is divided into 2. Employment income and what?
Trading income.
Do we have trading income? Does Nickel have a business doing? Do we have a trading income in this question? What is the trading income? Note what?
Note C.
C.
Okay. Help us read it.
Nickel runs a part-time business under the name A&A Enterprises. Recent profit from the business as adjusted for the purpose of taxation as follows.
So, out of this trading income, out of this adjusted profit that is coming from trading income, which one are we going to take?
2022.
Why 2022? But we are doing 2023 year of assessment now.
Because it's
Trading
Trading
income
income
is
is assessed to tax on what
based on
basis?
preceding year
preceding
basis.
basis.
On preceding year basis. You are right, my brother. We are going to assess this 2022. Don't go and take 2023. Despite you are in 2023 year of assessment. No. Trading income is assessed to tax on preceding what?
Preceding year
basis.
basis.
So this adjusted profit we are going to take is for 2022. 6.6 million. Under the trading income, when you take adjusted profit, what do you minus from adjusted profit under the trading income?
Capital allowance.
Capital what?
Allowance.
Allowance. So, ladies and gentlemen, are we giving capital allowance in this question?
Yes, sir. D.
Which capital allowance are we going to take? Look at the list of capital allowance given to us. This examiner is not nice.
2023.
Sorry.
2020.
3.
Why 2023?
2022.
2022.
My sister, you are right. It's 2023. We are going to take. Why? Because tax year, another name for tax year means what? My colleague teach you tax year now. While he's doing a basis period, accounting year, tax year. Another name for tax year is what?
Accessible income.
Another name for tax year means year of assessment. This tax year is also made year of what?
Assessment.
Which year of assessment are we doing?
2023.
So which capital allowance are we going to take?
C. 2023.
2023. Because in this question, capital allowance, when they are writing capital allowance, they write it based on year of assessment. They do not write it based on year ended. Take for instance, let me do something so that you understand better. Assuming I write this capital allowance, when I was writing this capital, I write year ended. Which one are we going to take? I write year ended. Which one are we going to take?
2023.
2022. We are in if I write year ended, since we are in 2023 year of assessment, and capital allowance relate to adjusted profit, which year we are going to assess it based on preceding year basis. I'm going to take 2022. Do you understand me? But look at how the examiner writes it. They said tax what? Tax year. And I told you that tax year means what?
Year of assessment.
Year of assessment. So I'm going to take 2023. This 2023 I take is for 2022, but the examiner just writes it direct as year of assessment. Do you understand?
Yes.
So I'm going to take 2023 because tax year means year of assessment. It's different from, you should know the difference between year of assessment and year ended. Abi?
Yes, sir.
So you should know the difference. So if I want to take my adjusted profit now, 6.6 million, less capital allowance, 712. At the end of the day, my balance of the adjusted profit is 5888. That means I've done with all the earned income. In this question, do we have on earned income?
Yes, sir. Yeah.
What are the on earned income? Which note give us on earned income?
Note I.
Note I.
So, which on earned income are we going to take? Which year? On earned income is assessed to tax on what basis?
2022. Based on preceding year basis.
So we are going to take 2020 what?
2.
2. Dividend, 25,000. Rent, how much?
60,000.
Interest income is stated in net instead of what?
Instead of gross.
What are we going to do to the interest?
So we are going to convert it
to gross. So let me open an Excel for us to convert this to gross. So the interest is stated at net. Gross, my people, gross, the percentage for gross is how many percent? 100%. Abi? The percentage for net is how many percent? 90%. Because the withholding tax on interest, what is the withholding tax rate on interest? 10%.
10%.
So when you plus net plus withholding tax, you are going to get what? Gross, Abi?
Yes, sir.
You are going to get 100 gross when you plus the net plus withholding tax. In this question now, my people, in this question, we are giving amounts. This is amounts. The amount we are giving, they give us net, how much?
27 million.
27 million. And while we are solving, we must get the gross. How do we get the gross? Since we are giving net, how do we get the gross? It is mathematics. You will say 100 over what?
90.
Over 90. 100 over 90. Times that what? Net amount for you to get the gross. That means times 100 divided by 90. That means the gross will be how much?
30 million.
30 million.
30 million. How much will be the withholding tax?
3 million.
10%
3
of
million.
that.
10% of the gross. 3 million. So why solving this question? We must use gross. We can't use net. We must use gross. So our gross is going to be how much? 30,000. So look at it now. Dividend 25, rent 60, interest 100 over 90 times 27. That gives us how much?
30 million.
30 million. So ladies and gentlemen, at the end of the day, you add all the earned income together. All the earned income, when you add them together, it will give you 51,813. All the earned income, when you add it together, it will give you 51,813. All the unearned income, when you add it together, it will give you 115,000. At the end of the day, both earned income plus unearned income, both earned income plus unearned income, what are we going to have?
Total income.
Total income. That gives us how much? 166,813. 166, 81 what? 813. You now less what?
Frank investment
Income, which is that the same dividend amount, 25,000, 25 million. You less it. You will get your net total what?
Income.
Net total income. Your net total income is 141,813. You will now go and do your what? Tax what?
Tax exempt.
Tax exempt.
What are the tax exempt we have in this question? Let's go and search.
Sir. Sir, please, it should in case in a question, dividends was given as net amount. We now convert to gross. Are we still going to less it as frank investment?
Yes, my sister, you are going to less it as frank investment. Anytime dividend is given to you, you are going to less it as frank investment income.
Okay.
So, what are the tax exempt we have in this question? Oh yeah, what are the tax exempt? Let's search. What are the tax exempt? Let me search the tax exempt. Oh yeah. Number one tax exempt we have in this question is what? Contribution to what?
Contribution
NHF.
to National Housing Fund.
Pension contributions too. But we are not giving the amounts. We are not giving what?
The amount.
When we are not giving the amount, what do we do? Like I told you last week.
I think there's a rate.
What is the rate of NHF contribution? The minimum rate is what? 2.5% of basic what?
Basic salary.
Salary. Pension contribution, what is the rate? 8% of BHT. I told you last week.
Yeah.
8% of what?
BHT.
Do you know the meaning of BHT?
Yes, sir.
Basic salary, housing, and transport.
This person too, we have premium, life assurance premium. She will insure that life and that of her spouse, Mr. Tunde. When you as a taxpayer, when you insure your life and your spouse, both premium is part, we can use it as tax exempt. So life assurance premium that we are going to use for this lady is going to be how much?
The addition of the
2.8 plus what?
1.7.
That will give us how much?
4,500,000.
4.5. So tax exempt. Let's go and look at tax exempt. Number one tax exempt we have NHF, National Housing Fund. 2.5% of basic salary. How much is the basic salary in this question? Basic salary. How much? In the solution, how much is the basic salary?
35,000.
35,000. So 2.5% of 35,000.
$875.
875. Pension, 2.8% of sum of basic housing and transport. How much is basic? 35, Abby?
Yes.
Plus housing, how much is housing?
16.
Plus transport, When you add the three together, how much?
37,600.
37,600. So 8% of it.
3,008.
3,008. 3008. Do you understand how we get that?
Sir.
Yes, sir.
Do you understand that? Life assurance
Yes,
premium 4.5. Do you know how we get the 4.5?
Yes, sir.
We plus that Mrs. Nike plus a spouse. You plus it together. The 2.8 plus 1.7. So at the end of the day, your total tax exempt is 8383. When you minus it from the net total income, it will give you a gross income of how much? 133,430. I mean, you will now compare consolidated relief allowance. 1% of 133,430 plus 200,000. Which one is higher? I think 200,000 will be higher.
133,430.
I made a mistake here. Abi, my people.
200,000 is higher.
No.
200,000 is higher.
No. 133 is higher now.
133
Because this
is
figure is represented in millions.
in millions.
Most of students, why solving this question? Because there is 1,000 up. They will go and forget the 1,000 up. Do you understand, my people?
Yes,
If we
Yes.
are marking, you will know this is where most of the students make mistake. If you are marking, you understand this. Most of the students, they will make mistake here. They will think, this one is less than 200,000 and 1% of it. This amount is too small. They don't know that there is 1,000 up. This 133,430 is 133,430,000. Abi?
Yes.
Yes.
So 1% of it, it will give you 1,334,000. It's higher than 200,000. But when you want to write it, you will not put the 30 because we are using 1,000 up. Have you not so?
That's so.
So at the end of the day, plus 20% of GI, 20% of 133,430,000, it will give you 26,686. When you add the two together, you will have what? 28,020,000. You minus it from the gross income. So you now have a chargeable income of how much? Chargeable income of 105,410. Chargeable income of 105,400 and what? 410. You cannot compute your tax liability. Ladies and gentlemen, while you are computing your tax liability, don't use 1,000 up. You will convince. You will make mistake. I like myself. When I was writing ICAN, even though the question is using 1,000 up, for me not to be convinced, I will use the full amount. I don't want problem. I will use the full. I will not be penalized. Do you understand? I can't be penalized so that I will not make mistake. Why computing tax liability? Don't use 1,000 up. Use the full amount. First 300,000 at 7%, 21,000. Second 300,000 at 11%, 33,000. Next 500,000 at 15%, 75,000. Net 500,000 at 19%. Is how much? 90 what?
95,000.
95,000. Next 1.6 at 21%. 333,600. 336,000. How much will be above 3.2? How much? How much will be the above 3.2? That means this 105,410, when you minus 3.2 from it, the balance will be 102,209,700. At what percentage?
24%.
So it will give you this. It will give you 24,530,328. At the end of the day, what is the total tax due that this Mrs. Nika is going to pay? $25 million 90,328. This is the tax he's supposed to pay. But he will not pay this amount because some of his income, they have deducted withholding tax as source. That withholding tax deducted as source on some of his income, we are going to remove it before we know his next tax due. That means he has paid some advanced tax. What income attracts withholding tax as source? What type of income attracts withholding tax as source? Unearned income. Unearned income. Let's go to the unearned income. How many unearned income do we have in this question?
3.
3. We are not going to use withholding tax of dividend though, because we have removed dividend as part of our income, being frank investment income. Do you understand?
Yes.
Yes, sir.
We have removed dividend now, Abi.
Yes.
Yes, sir.
So out of this unearned income, the only two that will attract withholding tax that we are going to remove is rent and what?
Interest.
So the rent, the withholding tax on rent is 10%. So 10% of 60,000.
6,000.
6,000. So, ladies and gentlemen, while you are writing the tax liability, me, I write 6 million. If you like, you can write 6,000. Abi? Eh? Because while you are expressing it in the tax liability, we are no more using 1,000 in the tax liability. Abi?
Yes.
That amount, rent, is 60 million.
Yes.
10% of 60 million. It will give you what?
6 million. 6 million.
6 million. Do you understand? Like I told
Yes.
you, why you want to do the tax liability, don't use 1,000. If you use 1,000, you will miss it. There is no drama. Interest, the interest amount, the gross amount is 30 million. 10% of 30 million.
3 million.
So when you minus those withholding tax from the 25,090,328, what will be the balance? Your net tax due. The balance is what?
Next tax due.
16,090,328. Your monthly tax payable, how much tax you pay every month? What are you going to do? Monthly tax payable.
You divide the net tax due by 12 months to have your monthly tax payable.
You will divide it by 12. Do you understand? Do you understand? So
Yes,
you will
Yes,
sir.
get
sir.
a monthly tax payable of 1,340,861. So this is what we have on this question. Do we have any
Sir.
question here? Yes, ma'am.
Yes. This above 300,000, is it not above 3,200,000? Is it not the 105,410,000 minus this 3,200,000?
Yes, is the one.
So I'm
Is the
having
one.
when I minus it, I'm having 102,210.
Yes, my sister, the reason why I'm having this 700, because in my solution, I use Excel. Excel. You know, Excel, all the approximation, do you understand me? That we have been
Yes, sir.
approximating since up. That is the
Mm.
reason why. So, my sister, you can use 210. Me, I use 209, 700. The
Okay.
major difference we are having is 300. Abi?
Yes, sir.
That 300 is because I use Excel to do this calculation. Do you understand my point?
Yes, sir.
I use Excel. So, using 210, you are right. You are right. Do you understand? 102,
Yes.
210. Use it. You are right.
Okay, sir. Thank you.
Yeah. Any other question?